the board approved the filing of the papers with IRDA with the actuarial report, and you need an IRDA permission before you file the draft prospectus with SEBI. So we have applied to IRDA. Everyone noticed this section 35, but most of the lawyers, or all the lawyers who were our advisors, different legal firms, said that since it is a composite scheme, it is one scheme, IRDA can look at it that the life insurance company merges with a finance company and then merges with HDFC Life. The Act very clearly said that a life company can only merge with another life company.
Only pure play mergers involved.
Pure play merger.
Yeah.
Now this was what, since it was one scheme, it was a comprehensive scheme, it happened simultaneously, the legal fraternity was reasonably convinced that this will go through. And then IRDA turned it down. IRDA referred it to Delhi, to the Solicitor General, and the opinion came negative.
Sure.
We were very disappointed because both the companies were very keen to merge. We feel we had the best synergies, the compatibility, the synergies, the bank assurance partners, everything worked well. And it was an ideal marriage if it would have happened.
So looking ahead, what about the IPO which you have now decided to go ahead with? How confident are you?
We have extremely warm, friendly relationships with the Max team, with Mr. Analjit Singh and his senior management. We are still as keen as they are. Both of us are still keen. If we can find a structure that can work, if we can find a structure that is acceptable to the IRDA, to our regulators. But since such a long time had passed, we are simultaneously moving the IPO machinery, because the IPO also takes time, doing an IPO. So we are simultaneously doing, therefore we have applied to IRDA, and subsequently we will apply to SEBI with a draft prospectus. On your second question, we feel reasonably confident that HDFC Standard Life, one of the larger companies in life insurance, will have a good reception in the market. And so we are not worried about half a dozen other insurance coming into the market. When we are ready with all the legal requirements, we hope to enter the market. The estimate time today given by investment bankers is end November.
All right. On that optimistic note, Mr. Parekh, I'm tempted to ask you, post the rejection of the proposed merger, the original structure between Max Life and HDFC Life, was an IPO for HDFC Life perhaps the only reasonable option? Because one must keep in mind that you also have a foreign partner, Standard Life, which of course would also, like any other foreign insurer, want to be very eager to monetize its investment in HDFC Life. Was there any pressure from Standard Life in terms of coming out with an IPO?
There was no pressure, there was no misunderstanding. We have the best of relations with Standard Life, despite most insurance companies having problems with their partners.
There's a lot of flex currently in the industry.
There's a lot of flex in quite a few companies, if not all, most of the companies. We have, both of us were keen to have an IPO if the merger didn't happen. Now, even if after the IPO, we will still pursue Max Life.
All right.
And we will see if it is suitable to them, whether HDFC Life after the IPO can merge with Max Life. We have to examine these proposals, but at the moment we are going ahead with the IPO.
All right. Now, Mr. Parekh, HDFC Life has told the stock exchanges that a maximum of 20% equity capital of HDFC Life would be offered for sale in the IPO. What the markets are very keen to know is, by when would the ratio of equity dilution of HDFC and Standard Life be finalized by the two companies? And as you said, when can we expect the IPO to hit the markets? December is the current
November
timing?
end. Okay. November end we hope to hit the market. Up to 20% we've said. You know, in 3 years you have to list 25%. We have 1%, little less than 1% with Premji Foundation.
Sure.
And the employees have 2.5% or so. But the employee stock option over the next 3, 4, 5 years will end up with 5% with Premji and our employees. So if we do 20, then we satisfy the stock exchange rules. Now, we have not yet taken a view whether we do the full 20 together or we do 15, 16 and keep some later on, a year or two later. And we will probably divest in the same proportion as our equity with Standard Life, because that is a fair way of doing it. They have 35%, they have 35, we have 60.
Sure.
So on that ratio.
You said a little earlier that you were disappointed with the initial rejection of the merger structure from the IRDAI. Do you think perhaps the regulator should be a little more flexible in its approach and appreciate some of the practical business realities of such a complex merger on the ground?
See, the regulator is bound by the law, by the Act. If the Act is not very clear and the wording is not clear, there is always a misinterpretation. And every regulator will take a cautious view, because it very clearly in black and white says that one life company can only merge with another life company. If you look at it simplistically, on paper it's not possible, and that's the stand the regulator has taken. So you can't blame them. Perhaps at the time of drafting of the legislation, it could have been said that a composite scheme of merger where the resultant is a life insurance company only should be permitted, then it would have been different. But the drafting was done many, many years ago.
Is there scope for a relook perhaps then, sir?
I don't think we can wait that long, because changing legislation takes a long time. And it's not practical for one company to wait for it or ask for it also. It's not fair on us to ask the regulator, please change the regulation.
Mr. Parekh, you made one thing amply clear, explicitly clear, and that is something that will clearly be heard by the shareholders, that the talks with Max are definitely not off the table and you are still considering them at a later stage. But what is most important is whether both the companies arrive at a structure that is satisfactory to the regulator. Are you and Max considering alternative merger structures? And if yes, are you optimistic of them being cleared at a later stage?
The structure has to be done by them, not by us.
All right.
We have only one life company. They have two companies.
All right.
So whether they are able to structure it in such a way that they do away with one company, we don't know. When we file the prospectus, it will be amply clear that we are doing it alone and there is no merger.
All right.
And there is no deal, because we can't file a prospectus with lack of clarity.
Absolutely.
So we still have a few weeks, 2-3 weeks till the IRDA approval comes. In the prospectus, we'll have to mention very clearly that there is no merger, there are no talks, the talks are off. If within that time we can get some structure that's workable, who knows? But at the moment, it looks that our IPO process is on full steam.
All right, great. Two quick questions before I wrap up, Mr. Parekh. And you're a veteran banker, and there is a particular case that on which a verdict was passed recently by the Gujarat High Court. It was a case wherein SR had challenged the RBI. Mr. Parekh, the Gujarat High Court's verdict makes it very, very clear that the RBI does have the power to direct banks to initiate insolvency proceedings under the IBC. There was also a fear that if the verdict had gone against the regulator, it would have derailed the entire IBC process, because we are still in nascent stages. How would you respond as a veteran banker to this verdict coming in? Because it was the first case where a corporate had taken the regulator heads on.
No, the wording of the RBI was a little faulty, I would say.
All right.
Because instead of telling the banks to be taking quick action, it said NCLT.
Yes, and they issued a corrigendum later.
Yeah,
yes.
And should look at it expeditiously.
Yes, yes.
Now, the courts are independent organizations, so it is a slip of a pen.
Yes.
I don't think it's something very serious. And it was overturned as soon as RBI amended the memo, amended the notification, it was immediately approved by the NCLT.
The fact that the RBI's powers have been reiterated by the Gujarat High Court, is that good news for the IBC?
Very good news. It's extremely good news. And it is good news now, I think, for the other 10, 11 companies also. Fairly fast progress should be made.
You're the founding chairman of IDFC, sir, and allow me to get your thoughts on another impending merger, which is of course the merger which has been proposed between the Shriram Group and IDFC. Now, I recollect on the day of the announcement, you had said that this is a marriage made in heaven. But on the street, there seems to be a little bit of trepidation regarding the regulatory uncertainties. And I'll tell you why. Analysts are saying that they anticipate issues in having an NBFC and a bank under the same non-operative financial holding company. It's going to be a complicated and painful process, isn't it? Though the intentions and the synergies are clearly there.
No, I think the market probably has not. I think they have not appreciated.
All right.
When IDFC Bank got a license, who applied for the license? It was IDFC Limited who applied for the license.
Sure.
IDFC Limited got a banking license. The license conditions were for the first 5 years, you cannot reduce your stake below 40% in IDFC Bank. So that is one constraint. They are only in the second year. So they still have to wait for 3 years before IDFC Limited can come down below 40%.
Sure.
If Shriram Transport merged with IDFC Bank Limited, because that's a large company, is the biggest company in the Shriram group, asset-wise, the holding of IDFC Limited and IDFC Bank would come down significantly.
Significantly, yes.
Which went against the RBI policy. And therefore, IDFC has requested whether Shriram Transport can continue to be as a subsidiary, wholly owned subsidiary of IDFC Limited.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.